So we're going to make this interesting, guys, because we believe in the manufacturers we support, we love, and without them, we have no blockchain. Unfortunately, without mining, there is no blockchain. The inevitable truth means that we want to have creative questions, and we have not curated these questions and fed the manufacturers with questions so they don't know what we're going to ask. So this is what's going to be fun because they don't know what we're going to ask. But we also want to invite you guys to come up with really good questions. So we're going to let 3 from the public at the end, when Christy finishes the questions that she has, for 3 of you to line up right here, okay? And she'll call you up, and basically you can ask the questions yourself, okay? So we want to make it fun. We want to make it interesting. It's not every day where you have the best manufacturers of ASICs in the world sitting together. We're missing someone. We're missing Bitmain. Bitmain, come on up. Bitmain. Did Bitmain leave the building? Bitmain? They escaped. They left. So it's, okay. We got to have Bitmain. Bitmain. Anyone seen Bitmain?
We will give Bitmain 2 minutes before we start, but they're out? They're out? They're not cool enough? Oh, okay. We're jumping straight in, I guess. All right, so, which question to start with first? Where to start? What are some of the aspects of mining ASIC development that might surprise people in the audience today? Talk about your most painful lessons learned. You go first, MicroBT.
Most painful lesson learned. Painful lesson, yeah. So this is a good question, yeah. So I think in this industry, so no matter it is farm or facility provider or the miner manufacturer like us, definitely have the lessons. So the most painful lessons for MicroBT is that in the year 2019, so we have produced more M3, which power efficiency is at 180 watts per terahash, and is too much higher than the the best miners in the market, which is S9 at the moment. So the power efficiency is around 100 watts per terahash. So this give us a very, the most painful lesson, just because, this all miners which was made without order, so it becomes the stock, or we say inventory for the company. So it's we really suffer huge loss because of making more miners, which we decide we were not able to sell them out. So, and the worst thing is that we decided hold those miners in hand instead of selling them at the lower price. So that's why all these miners become, the stocks in hand, and so we really suffer huge loss because of this in the year 2018. Yeah.
So hardest lessons, right, Christy? So hardest lessons for Canaan, I would call it 2017, at the end of 2017, beginning of 2018. We had a huge inventory of the 8 series miners. Then the bear market started, and we ended up with almost 45,000 units in inventory without being able to move them. And not being able to move them, I mean, we could have moved them, but it would have happened the same thing that happened to Whatsminer. We would have to let them go for a really low price. So that was a hard lesson learned on how much capital you should deploy or use in the upcoming batches for at least non-new gen miners. I would call it that way.
Okay. So I think the most challenging problem we had was probably at the beginning of 2018, end of 2017. Because Innosilicon has always been an R&D focused company. The company was started in 2006. So we've been doing IC designs for a long time, but we were never really a manufacturer until we got into the cryptocurrency space. So even though we designed the first Bitcoin machine back in 2013, the volume wasn't as large as what we started doing in 2017 and also at the beginning of 2018. So we were having orders of 100,000 miners per month at the time. And we really learned a hard lesson when we tried to ramp up production within a month from a few thousand miners to 100,000 miners. So a lot of things that went wrong actually went wrong. And there was a lot of night we have to spend at the factory in order to make things correct. And we learned that the manufacturing is really about, you have to really, the error of margin is pretty small and the loss can be large if you made a small mistake. Okay.
I think I would say something in a similar vein is that manufacturing is really difficult in the sense that I don't think we've ever had a 2-week period where we didn't get some piece of news that cost us tens to hundreds of thousands of dollars and weeks of delay and people on site, emergency, trying to run, and it's just a continuous battle. Because you never make it a month without hearing something that's disaster level on your production line, whether it's your production manager getting fired or someone placed a bad PO and now you can't get parts for 3 months, or it just never stops.
Okay, very good. Okay, well, that was the easy question. So now to jump into the real questions. Do you believe there are ethical issues with being a mining manufacturer, as well as mining yourselves and competing against your customer base?
We don't mind.
Are you sure on that?
Positive.
Interesting.
Sure. I'm very sure. There used to be a farm in 2016 and 2017. It closed down. The farm was located in Sweden. This is all that I can disclose, but it no longer exists.
So Canaan as a principle does not mine today anymore?
Nope.
Whatsminer.
Yeah, so this can follow the first question because we had produced more miners. So we have some miners in hand, and so we decided not to sell them at lower price. Then what we have done is that we shift all those miners to the farm, and so we mine on our own. So however, unfortunately, in the end of 2018, because the BTC price crashed down, and so running M3 is not profitable. So that's why we stopped mining with M3. So however, right now we have some small hash rate in hand mining on our own. We do have some M10s and Decred miners, D1, in hand for mining. So, but the hash rate is not so big. Yeah. So we do mining on our own, right now. So we also decided that with customer we can do co-mining business. So customer may pay 75% of the cost of the miner, and then so we share 25% hash rate with customer, and those miners gonna be hosted in partners farm. Yeah. So this is what we are doing.
Okay. So I think the problem of competing with a customer is twofold. So Bitcoin has its own class, then all the other smaller coins is a different story. So I think for a new coin, like we introduced the Zcash machine last year, we actually learned a hard lesson because when ASIC usually is first introduced, you will see a large increase in hash rate. So the profitability will actually drop when you introduce the ASIC into the market. So the ASIC machine will be selling for a high price initially when we first introduce it. And as the hash rate increases dramatically, the profitability drops, and the price of the machine will drop pretty quickly as well. I found that a lot of our customers does not understand that dynamics very well. Even if they understand it, they don't really accept that a piece of equipment they bought 1 month ago for $8,000 will become $6,000, $4,000, and then $2,000 by year end. So thinking back, if that it might be actually beneficial for the equipment manufacturer to first start mining ASICs on their own for a new ASICs. Once you establish a kind of a stable hash rate pool, then you start selling the equipment to the general public to avoid the problem that we had trying to explain to customers why the miner's price will drop from $10,000 to $2,000 within a year. Then for Bitcoin, it's a different story because we already have a pretty large pool of ASIC miners. To my calculation, should be about 4 or 5 million of miners out there already. So even as a manufacturer that we do minings ourselves, I don't think it makes such a large impact on either the pricing of the machine or on the overall mining community. So over there, we Innosilicon, we actually have a significant portion of the total hash rate because during the downturn last year, the price was pretty depressed. And as a company, we decided that instead of selling the miners cheap, we might as well, start mining our own and then try to recover our cost that way. So we kept quite a few miners, and even to this day, we are still mining. But I don't think that's really detrimental or in any way harms the overall mining community by doing that. Okay.
Yeah, so we see manufacturer self-mining as a significant conflict of interest between the manufacturer and the customer. And it boils down to, I think, one key difference between mining and most industries, which is that mining is zero-sum. So for every piece of hardware that the manufacturer creates or mines on, that dilutes the value of the hardware to everyone else. So if there's especially if there's a margin involved with the sale, if the manufacturer is able to compete with the customer at a much better rate, then they can continue producing long after it would make sense for the customer to continue buying. So if there's this information barrier where the customer doesn't know how many machines have been produced, doesn't know what electricity rate the manufacturer is mining at, the customer is at a substantial disadvantage. And I think historically we've seen that generally speaking, the manufacturer is not benevolent with regards to this information, that it's usually worse for the customer. So we generally advise customers that they should not do deals with manufacturers who are not disclosing production volumes. And then if manufacturers are mining themselves, you have to understand that you are, as a mining farm, you are inherently disadvantaged against a manufacturer who mines them for themselves because you have to pay for the manufacturer's margin and the manufacturer doesn't. And so I think that it's okay if a manufacturer is like a pure play, pure mining, so they don't sell to customers because then there's no asymmetry there. And I think it's okay if a manufacturer is pure play customer side. They don't mind themselves. They only sell to customers. But when you have this middle ground, the manufacturer can be irresponsible towards their customers and still make plenty of money.
So Obelisk, Canaan, both of you have a firm stance on open source software, which is quite positive. Innosilicon and Whatsminer, you have a deferring view. So let's talk a little bit about open source. Why have you made the choice you have to either open source your software that runs on your miners or keep it closed source? So starting with Obelisk, why did you make the choice to go open source?
Yeah, so at the end of the day, Obelisk is cryptocurrency first, and we're decentralization first. And so what we really want to see, and this doesn't just apply to the mining community, it applies to the entire, like, I guess, way the world operates. And so we want to see a reduction of barrier to entry. We want to see a reduction of moats. The open source world was like super nice to me. When I was growing up, I got to play with a bunch of these technologies on the software side that had they been in the hardware world, it maybe would have cost hundreds of thousands of dollars. And so, I think that if mining firmware is open source, it's easier for new competing manufacturers to get started, new competing hardware companies to get started. If mining pool software is open source, you can get a better, a higher diversity in the ecosystem of mining pools. And so from our perspective, we really value open source because we believe that that's what moves the industry forward and moves the world forward. So it's not so much about building a moat for Obelisk as it is about breaking down the barriers that keep cryptocurrency mining centralized. We want to see that dissipated.
Canaan, what is your stance on open source software?
So we've been using open source software for almost the same reasons as Obelisk has been doing it, and we have made very clear statements on our standpoint on that, or viewpoint on open software. Even if you guys go into the Canaan website, and there is the possibility to download the entire CG miner we use and everything to make your own miner, basically. So you even have diagrams and everything at your disposal. The company slogan that has been kind of taken away from the logo says, grow the blockchain. That's the main purpose when the company was started back in 2013, to grow the blockchain. And if you want to grow the blockchain, you want to keep it decentralized, you want to keep it everything that we stand for as a manufacturer, so you need to keep it open source. That just goes hand to hand. That's why we use open source and basically that.
MicroBT. Today, most of your devices are still running closed source software. So tell us a little bit about why you made that choice, that decision.
So, open means to some extent it is open, but not all the code are open to the developers. So, for example, we base on CG miner. So we have an API to fetch out so the status of chip, how they are working fine. So what is the frequency they are working? What is the power consumption? And so all this information can be fetched out from the open API of the software. However, so because every company has its own technical advantage or technical design methodology, but so for example, our miner has self-optimized the voltage and the frequency search algorithm to make the miners every chip so working in the best situation and contribute the best hash rate and working in the best power efficiency. So that algorithm, I think, nobody is willing to, open to others. So, which means we can open to third-party software to manage the miners well. However, so we might not be able to open all the code to, to customer or to partners for all the software. So of course, probably we are not able to fully open the software just because, we have to consider that the safety of the miner, because if somebody gonna to overclock the miners, it may reduce the lifetime of the miner itself, because if the miner is designed running on 60 watts, so you overclock and each chip runs at higher power consumption if the heat is not able to radiate it with higher efficiency. So the life of the chip may not be as long as we design. So that's why, to some extent, we open, and so we are not opening for all the code of the software and the firmware, yeah.
And so trade secrets, IP, and warranty are what drive you for certain parts of the software being closed. And how about you, Innosilicon? Is it sort of the same thing?
Yeah, I think we pretty much provide an API interface right now for our miners, so the user can do certain things and they cannot do other things. I think there are two main reasons why we want to provide the API interface instead of provide a completely open source software. One is for safety as well. So we do provide a warranty for our miners. So if the firmware is completely open source, then the user can do anything they want. Many times they can do things that's harmful to the miner's lifetime, or even can be dangerous and cause a fire. So we want to have certain control over that. That's reason number one. Reason number two is actually for security. So because the miner can also be infected with virus as well. And so because the miner is doing some kind of financial transaction in a sense, so we just don't want the miners to be hacked. So that's the second reason why we don't want to completely open source the software. Instead, we want to have a controlled API interface. And we can always add more API interface as the customer is needed on a need basis.
All right. So next big one is, let's talk a little bit about the defensive forks against ASICs. So quite a few of the different crypto coins are currently doing this in their pursuit of ASIC resistance. Do you believe this is wasteful? Is there any situation ever that you can think of as manufacturers where a defensive fork may be needed? Take it away, MicroBT.
Defensive force means? I'm not able to understand your question clearly. Yeah.
Like a cryptocurrency forks to break a certain set of hardware. So like take Monero. Someone made ASICs for Monero, and then Monero did a defensive fork to go back to GPUs. They broke all the ASICs. Same thing with Grin. Grin has a 6-month schedule where they change the proof of work. I'll go ahead and repeat that. So a defensive fork is when a cryptocurrency changes their proof of work algorithm to break a certain set of hardware. So I think two like headline cases would be Monero. Every time that ASICs show up on Monero, Monero does a fork to break the ASICs, and they have a very strong, clear anti-ASIC stance. And they let you know, if you make ASICs, we'll break them. And then Grin is another example where they have a schedule. Every 6 months, they tweak their proof of work algorithm so that any ASICs which target their ASIC resistant proof of work algorithm, or rather their like GPU proof of work algorithm, Grin will fork to break those ASICs.
So now that we've understood what a defensive fork is it wasteful?
Yeah, so of course, because so this is the reason why right now MicroBT focus more on Bitcoin miners. So just because if we move to other crypto for ASIC design, so it has risk that for example, you just finish the design of the ASICs and you submit for taping out the mask, and then algorithm get changed. So the whole investment for designing the chips and so doing the mask is fully wasted. And actually, this happened in the industry. So some crypto just keeping change the algorithm, just prevent ASIC get into it. So that's why when we select the ASIC to design for some crypto, so we are really careful. So if we do not have very close relationship with the algorithm design team, so we will not design the ASIC for that crypto coin. So this is how we are doing. So probably, so we have planned that. So we are also just do some pre-research. So which crypto miner so we should move forward for ASICs. So we are looking into Litecoin. So those crypto, so the algorithm is quite fixed, may not get a chance to be changed. So this is what we are doing. Yeah.
And Canaan, do you obviously these are wasteful, these defensive forks. Do you ever think that there's a need for them in any case at all? Do you ever think of a situation where a coin might need to do a defensive fork?
Answering that as a manufacturer, it's going to be definitely a little bit biased by my personal opinion, but I'll try to be as subjective as I can. I could think of occasions that it might be needed, a defensive fork, just to protect the ecosystem and protect the coin itself. But that also depends on the views and the vision of the project of the coin. So if it falls within what the project it's about and it falls within what the vision for that company was when they was originally created and originated, if the white paper, to say it somehow, allows it, our take in that doesn't really matter much to be.
List one of the situations where it might be applicable.
So one of the situations where it might be applicable would be I want to say Dash, for example. I think it would have helped a lot if there would have been a defensive fork for Dash. But that's my personal opinion, that you cannot take that as a word of Canaan. Personal opinion, yes.
Personal opinions are very good.
Yeah.
What about you, Innosilicon?
Oh, so the question was when do I feel a defensive fork is necessary?
Yes.
That's the question. So I guess it really depends on the ideology of sometimes of the core group, sometimes it's of the community. So if the core group or the community feels that having an ASIC miner is being too centralized, and it's against the intention of the blockchain, so it might be necessary to do that in order to further decentralize the ownership of the blockchain. So in that case, it might be justified. So as an ASIC manufacturer, so of course it will harm the investment that we already made in either designing or manufacturing the equipment, because they can no longer be used to mine that particular coin. And also, because it's an ASIC, not a GPU, it cannot be reallocated to do something else. So there's always a pro and a cons when you do a defensive ASIC. So I think it should be a decision that's not taken lightly. It should be, in a way, it's a consensus from the community before any such action is taken.
It feels a little unfair to ask you that question, David. But as Innosilicon said, it's a decision that's not to be taken lightly. Talk a little bit about your experiences with SIA and why you made that decision.
Yeah. Hello. Okay. Yeah, so we see the mining manufacturers as a security service, not just the manufacturers, but the whole mining complex. As a security service, we look to manufacturers to get censorship resistance, and we look to manufacturers to get security against double spends. And I think that if you feel that one is threatened, a fork is justified. And then I think there's also kind of a separate concern, which is that all decentralized projects are generally building towards some vision, whether it's decentralized cloud storage in the case of SIA, whether it's a world computer in the case of Ethereum, or sound money in the case of Bitcoin. Every project has an idea for what the way forward is, how, what's the best way to build a network. And a lot of these times these ideas clash. And so I personally disagree with many of the forks that have happened. For example, Monero, philosophically, I think Monero should embrace ASICs. On the other hand, ultimately, I have to like admit to myself that I might not be correct. The Monero way of doing things may be the better way, and I think the best way to test that out is to let people have different opinions, let people try different things. And so when I think that a defensive fork is justified any time that a community feels it's justified. And so, and maybe that community will split. We saw that with SIA, we've seen that with Monero, and I think we've seen that with several other projects as well, where it's like, if some subset of the community is like, no, we should keep these ASICs, they will break off into a separate coin. And I think that's actually like kind of the magic of blockchains and decentralization, is that two groups that disagree with each other on how governance should happen don't actually have to work together. They can both split off and go do their separate things and still be fully interoperable. So I'm in full support of any fork that has a critical mass of people behind it. And they don't even have to be a majority. If they want to be a minority and they go and they make their minority coin and it's doing its own thing, like I think they should be empowered to do that.
And final question, since we're here in the US, it feels very fitting. I'd like to understand, how has the trade war and the tariffs impacted your business and your customers? Innosilicon first again.
So I think the trade war impacts everybody, right? It impacted us just as badly as it probably impacted companies like Walmart or Target. So it basically increased the cost of doing business for the company and for the customer, and probably in the end we have to split that cost. It just means that less miners are coming to the US. They probably are going to Canada, they're going to Kyrgyzstan. So they basically are going to the rest of the world instead of flowing into US, which I feel I feel sorry for that, because I think US have a good legal system, and overall I think US should increase its share of mining. So I think tariff is preventing that.
Yeah, so this is a good question. Okay, so actually for MicroBT, so our business in United States is becoming better, because so right now the miners manufactured by us, so it is the best which is available in the market. So For the year 2019, of course, our business is better than the year 2018 and before. The reason behind that, so I just said, is because we have enough supply capability every month, and so miner is the best. The best means technically, so almost best, and commercially to customer is best. So to us, our business was not, impacted because the trade war between China and the U.S. However, many customer approach to us, saying that whether MicroBT has some solution to, help customer to save those tariffs. So that's why we are also seeking some solution. Okay, so the first choice is manufacture the miners maybe in those countries who has the agreement with the U.S. government that so all the items imported from those countries has no tariff, just like Malaysia or Thailand, those countries. So this is the solution, alternative solution number one. So we manufacture those miners maybe in Malaysia and Thailand. So we are seeking the solution, to try to make customer, can save the tariffs. And second solution we are seeking is that, so probably we will manufacture the miners in United States itself, so that tariff won't be a problem. But so right now, whether we manufacture this in Thailand, Malaysia, or we do this in United States is not finalized yet, but we are trying to do the best, get a solution, to avoid the tariff legally for customers, so without any risk. Yeah, so this is what we are doing. Yeah.
Legally is the important part.
Yeah.
Canaan.
So I would concur with what Roger said. We have been affected as any other industry that does businesses with China. I would focus more on the solutions, such as Vincent mentioned. We're entertaining the idea of manufacturing in the US, entertaining the idea of manufacturing in Canada, and also a third country in Asia that I'm not allowed to mention, but those are all options on the table right now. I think we should, instead of focusing on how to do it illegally or how disassemble the miner and bring it here in parts, we should focus on working on a new way to get miners here, or manufacturing them here, or at least do some part of the manufacturing here or in Canada that allows us to bypass the tariffs legally.
And David, you are US-based?
Yes. So I would actually say the tariffs have been pretty neutral for us. We are based in the U.S., which means that the tariffs give us a bit of a moat. We've definitely had more people come to us because of our U.S. manufacturing and asked to do business with us. So we've seen a pretty significant bump, and that has definitely been positive for us as American manufacturing. At the same time, big parts of our supply chain still come out of China, and so when the tariffs dropped, a lot of things we hadn't budgeted for came up as like sudden expenses. Suddenly the aluminum chassis that we were buying were much more expensive, or some of the bare boards had now a big fee on them that we hadn't budgeted for. So I think on the net it's been pretty neutral, but I do worry that mining is a global game, and the block reward doesn't care whether it was mined in Malaysia or China or the United States. So if you have this import restriction that's going to make things more expensive or force things to be manufactured in a certain place, that's going to reduce the competitiveness of U.S. mining farms. So as a U.S. mining manufacturer, I would say we haven't been affected that much, but I do worry that it may impact, say, a U.S. mining farm versus a Chinese mining farm that's not having to deal with these extra expenses.
Oops. And then for the final event, as we said, we want some questions from the audience. So we're going to pick 3 of you, 3 lucky folks. This is a once-in-a-lifetime opportunity to get to ask your favorite mining manufacturer that really hard question. So raise your hands. Which questions? We're going to randomly pick from the audience. Wow, if no one raises their hand, I'll be very disappointed. There we go. Come on up, Epic Blockchain.
Thanks, Christy. I'm just wondering about ethics, since we're talking about, business and whatnot. All the mining manufacturers practice a skimming strategy. You price premium when they first come out. You compete with your customers. The way I look at it is you make a lot of money mining. So if I take, Roger, since I'm looking at you, the A10, right? You price the A10 at close to $5,000. It's 3 times the hash rate of the E3. You're making, $2,500 if you release the rig on each one. You sell 100,000 of those things. You're making $250 million if I did the math correctly. There's a lot. My point is, there's a lot of money to spread around. Why generate this greed? Why not spread the ecosystem around fairly and make sure that everyone is happy and profitable? This way, you can get the small miners competing with the big miners and equalize the whole ecosystem. Thank you. That question is not just for Roger.
Wow, does anyone have a response to that? Come on, guys, don't make me force you on the spot.
So maybe I respond first.
There we go.
Okay.
The brave man.
So I think, so in Innosilicon, we've been doing IP and chip design for over a decade. And to me, we have 2 main lines of business. The traditional line of business is providing IP and doing design service for the general chip design community. And we really got into cryptocurrency by accident because one of our customers asked us to design a BTC ASIC back in 2013. And they went out of business after we have our first chip. So we have to recoup our investment, and we started trying to sell the chip, and eventually we found that selling the chip is really difficult. So we actually have to make our own miners. So that's how we went into the mining business. And we are also, as a company, learning over the last few years, because there are times when it was very profitable, as the audience mentioned, and we made a lot of money. And there are also times when we made huge investment, and we ordered tens of thousands of wafers from Samsung and made commitment of hundreds of millions of dollars. And then the market crashed. And then we are the ones left holding the bag. The company, there was I remember 2018, it was a very difficult time for the company. And luckily, things turned around. So it's a very high risk, high return business. And that's why my view is, it's just my personal view, not the company view, is to insulate the customer from some of these fluctuations. So especially, I think I mentioned that previously already, is when a new coin comes to the market, maybe the best way is not to release the ASIC to the general public at first. So it could be, Innosilicon, the company, do mining on its own. It could be we find partners to come together and start mining as a group. I believe once you have like a stable hash rate, and then you are talking about incremental changes, like Bitcoin, for example, it will be very hard to actually even double the hash rate of a Bitcoin today. it takes probably at least 6 months, 9 months, a year to do that. So once it's more stable, then probably that would be a better time to let the investor, the general public, come in and join the mining. So that's just my personal view. Okay.
Yeah, so I think one of the big challenges is that it's tough to predict the marketplace, and you have this large upfront cost. So I'm going to throw some rough numbers out there. Let's say it costs $10 million to develop and tape out an ASIC, and you have a marketplace that can sustain, say, $20 million of hardware. So as a manufacturer, we have to place in a massive margin. We have to charge you something like 2x what it costs to actually make each machine, because we need to make back that $10 million that we spent on research and development. And then, of course, if the market suddenly explodes, gets much bigger, now in order to stay competitive with everyone else, all the other manufacturers, we have to bring the price down. And so the challenge for us is to find a way to bring the price down. As we sell more machines, the amount of money that we need to collect to pay back our initial investment shrinks. We have to find a way to drop the price that is fair to our previous customers. And I think, and if financial regulation wasn't a barrier, what we would probably do is we would just make each machine like its own investment. And so as we sell more machines, you get the early buyers get paid for participating. That's illegal under U.S. security law. So we don't do that as much as I think it's a good model. So what we do instead is we try and pay attention to how much profitability each of our machines have had. And we try and make sure if you bought a machine early and you've been running it, the revenue you made from that is more than you would have saved by waiting to buy a miner. But it can be a tricky thing to balance. And it's something we're definitely aware of. We definitely we focus on, but then sometimes the market turns upside down and there's no good way to move forward. When it can be difficult to keep things right for your early customers.
As I have stated before, Canaan doesn't mine actually with their miners. There used to be a time when we did. That stopped back in 2017. And that, Henry, that's a question more towards the vision and the internal politics of the company. So if that fits the role of the company, if that fits their model of business, then that's basically their decision. Even if it's competing against their own customers, then it could potentially be a conflict of interest. But that's a very internal question to be, it's a decision made from the top down. That's how I put it.
Okay. Lucky last.
So this happening just because, so in my eyes that crypto coin miner is a very specific commodity. It is not like, mobile phones, so other products. So other products, the price depends on its cost. So however, the price of the miner, so we have to say it does not base on the cost. So it based on so how fast it can, so make money. Okay, so this result in that so many so weird things happen in crypto mining business, industry or you so. For example, so you can see that so some guys sell the miner 3 months before. However, so after 3 months, BTC price goes crazy, and so they can just sell the miners 2 times or 3 times. They sell earlier. So then probably they decided to do is that they sell those miners to others and just refund the money, or even don't refund the money to earlier purchaser. So all this happened just because the committee of this, crypto miner is really specific. So that's why, the purchaser gonna expect that, so I can get this miner, as cheap as possible so that I can make more money. So maybe probably the vendor or, the supplier of the miner can just, keep the miners in the hand for quite a long time. And, so when the profit goes down, so the miners was handed over to the customer. This is happening. So, I mean, this is the risk. So for the investors or, for the manufacturer has to take. Okay, so if you decide, to make more miners, the risk you have to take because, so after 2 months, these miners maybe, just a mental, so you cannot sell them at higher price. So instead of, hear what people are, saying, so you just see what manufacturer is doing. So for example, so we're gonna say that, so we will not hold any miners in hand. So though, for example, we promise some customer that, so we're gonna supply you the miners in November. However, if the miner is ready, so we can prepone the lead time, so in October. So at least the MicroBT won't hold those miners in our hand and mining on our own, and then so November only we give the miners to you. So if we can, prepone the lead time, so we won't hold those miners in hand. You just see what people doing. So and finally you will see who are the vendors you can trust. So who are the vendors just hurt you always. So you have to be very smart in this industry because anything can happen. Yeah.
All right. Well, crowd, thank our lovely panelists today. We learned a fair amount. Thank you guys very much for answering some hard questions. That's all we have time for, and I think we have closing remarks for Bitcoin from Bitcoin.com, BTC.com. One more question. Oh, do we want to allow one more question? Okay, we'll do one last question. Is Brains going to be the person to ask the last question? I think so.
Yeah, my question is to those closed source manufacturers. How do you feel about breaking the GPL licensing? Because technically, if I'm your customer and if I get the hardware from you, which for example, we have a few sample pieces from MicroBT, I should be obliged to receive the full source package so that I can verify that the miner is really doing what's supposed to do according to the specs. So unless you're running your own mining software, then it's technically a violation of the licensing. Thank you.
Do we have any answers for that? Manufacturers, GPL. GPL is the software license that most of CG Miner was actually licensed under, as well as some of the existing code base that is used today in mining software. So GPL, I think David can actually explain GPL a lot better than I can. So.
GPL is what's called a viral license. It basically says if you use this code, you must publish all changes to the code and make these changes available to the users. So the gripe is that some manufacturers have been caught using code that was written under the GPL license without complying with the GPL license, which is under US law illegal. Of course, I'm happy to say Obelisk open sources everything. So we are GPL compliant, and we definitely intend to continue to be GPL compliant.
Roger, you've got any response to that?
Okay. So yeah, I think we always will try our best to be compliant with all the legal requirements. Yeah, whether it's in the US or whether it's in China. At the same time, we also want to balance that against the potential risks of the miner being hacked and also safety of the miner itself. So we always try to achieve a balance that can satisfy both ends as much as we can.
Just to be clear, removing SSH doesn't prevent your miner from being hacked.
Yes.
Just to be clear.
Yeah, we'll resolve that SSH problem.
Okay, good. You heard it here first. Micro BT, you have any words about GPL?
Probably I'm not the right person to answer this question.
Ah,
Yeah.
I see. You gonna give it a shot anyway?
Huh?
Andreas, Nan.
What's your name? Ian? Ian, I'm not aware that we are in breach of the GPU licensing as Canaan.
I checked your sources there on GitHub. So.
Thank you.
You're compliant. You're in the good books.
Yes, I was 99% sure that we were. I was just, hesitated a little bit, but.
What do you think
Wow.
about the GPL violation that does take place in the mining community today? Because it's a bit of a hot topic
Yeah.
for miners at large.
I think it's like addressing the elephant in the room. So we should definitely have a conversation. Yeah, kind of definitely expect an answer to that from those who are in breach. So it's very simple. It's just there's an issue, address it, and try to correct it the best way you can, and ask for apologies, I guess.
Do we have any final questions? Ah, here we go. Now things are heating up. Be nice.
So I have a less aggressive question, I guess. Earlier in one of the presentations, somebody projected that the doubling of the performance, like hashes per joule of ASICs, is going to tail off. Like it's not going to go up as quickly as it has in the past because of maybe the nodes are getting harder to work on or whatever. So I just thought it would be interesting to hear what different manufacturers think. Like how quickly is the hash rate per joule going to keep going up? And are we hitting some kind of wall and what's going on? I guess at least for SHA, I don't know if it's probably different for each algorithm, but SHA is the mature one. So.
Who wants to take a crack at answering? David first.
All right, I'll answer first. I believe that the technology, the underlying semiconductor technology is starting to tail off. I don't think it's tailing off as hard as a lot of people think it's flat. It's not flat. It's still semiconductor technology is getting better still quite rapidly. So the doublings maybe are 3 or 4 years, but that's still quite aggressive. On the actual SHA-256 design level, from what I've seen, there is substantial improvement left in the designs, even on the best chips that are available today. I think the lowest level, most gruesome types of optimizations haven't been done yet. And I think that we will continue to see chips getting better generation after generation faster than the underlying nodes are getting better, at least for a while.
Roger?
Okay. I think I'm the one that did that slide projecting the slowdown in the efficiency improvement. So during the last 6 years, basically almost every year efficiency has doubled. One of the reasons is, of course, is improvement in design. A second reason is because really we moved from the 28 nanometer node down all the way down to 7 nanometer node, which is the state-of-the-art technology. And people have learned the hard lesson that moving down to the state-of-the-art is costly. For example, the 7 nanometer, not only it's expensive, also the capacity is constrained because now you find yourself fighting that capacity against companies like Apple and Huawei, who really needs that 7 nanometer to make a small cell phone or make that 5G equipment. So that easy improvement of just moving down the technology node is pretty much ended. Of course, the technology itself will continue to improve. For example, Samsung, both Samsung and TSMC has roadmaps going down from 7 nanometer to 5 and eventually to 3 nanometers right now. So basically everything is going more vertical. You are stacking more devices in a three-dimensional way. But that's going to be a lot slower, and also depends on economics. It might be too expensive to stay at the most advanced node. So if we take the process improvement factor away from the overall increase in efficiency, I think it should slow down the efficiency improvement by at least 50%. So probably it's not going to be doubling every year. It's probably going to be doubling every 2, 3, or 4 years.
Canaan?
We actually concur with what Roger said about the efficiency doubling up instead of 1 year, every 2 or 3 years. One of the main reasons being that the 7 nanometer process, it's not that mature for ASIC chips, and that's basically the main reason why we went back to 16 nanometers instead of continuing down the path of 7 nanometer. Availability and price played a big role in that. So as much as we want to see efficiency keep going up at the same rate that it has been going up, I don't believe we're going to see that, at least not a steady pace as it has been doing.
Lucky last again, MicroBT.
Yeah, again, MicroBT. So from our side, yes, so the efficiency of the chip always go higher. So it has few factors to, for the R6 performance. So the first is, which process node you go for. Yes, that is the, the baseline you can reach. For example, so for 16 nanometer process node, maybe, so based on the design methodology right now, so you may be able to achieve below 60 watts per terahash. That is possible technically, okay. So however, for example, right now we are running on 8 nanometer, it goes to 48 watts per terahash. However, I think still it has 15 to 20% space to improve. So however, right now I think so the speed that you can, so let's say half the power efficiency, so it will take a longer time. So it won't happen, just like, so move from 16 nanometer to 7 nanometer or 8 nanometer. So it will take some time to move, for example. So you can get 8 nanometer, so right now, but so to make 5 nanometer mature enough, it will take maybe 2 years. Because, as others also share that to make the best chips, because crypto coin miner is quite chip cost sensitive, because the chip cost consists around 80% of the cost of the miner, even higher than that. So if the process node of the chip is not design is not so mature, so the yield of the wafer you cannot improve to a certain percentage. So it does not make sense. You have, you are able to make, let's say, power efficiency at 30 watts per terahash. However, per terahash cost is much higher than, so get the miners at probably 8 nanometer or 7 nanometer. So to make the crypto miner more mature, so which is affordable, so we have to wait till the process node, advance the process node will mature enough. So yes, continuously that the performance of chip will be further enhanced. However, the speed will be slowed down. So this is opinion from our side.
All right, guys, we're about to get shooed off the stage. So give a round of applause for our panelists because they seriously answered some tough questions. Thank you guys so much. Thank you very much.